Etoro is a social trading and multi-asset brokerage platform that allows users to invest in a wide range of financial assets, including stocks, cryptocurrencies, commodities, indices, and more. It was founded in 2007 and has gained popularity for its unique approach to online trading, which combines traditional financial markets with social networking features. Here are some of the key aspects of Etoro, along with its pros and cons. Pros 1. Social trading. Etoro is known for its social trading feature, which allows users to follow and copy the trades of experienced and successful investors. This can be helpful for beginners who want to learn from more experienced traders or for those who prefer a more passive approach to investing. 2. Diverse asset selection. Etoro offers a wide variety of financial assets for trading, including stocks, cryptocurrencies, commodities, forex, indices, and more. This diversity allows traders to create a diversified portfolio. 3. User-friendly interface. The platform is designed to be user-friendly and intuitive, making it accessible to traders of all experience levels. It offers a visually appealing and easy-to-navigate interface. 4. Regulation. Etoro is regulated in multiple jurisdictions, including the UK, Australia, and Cyprus, which adds a layer of security and oversight for traders. 5. No commissions. Etoro introduced commission-free trading on stocks and ETFs for its users, which can lead to cost savings compared to traditional brokers. 6. Demo account. Etoro provides a free demo account, allowing users to practice trading with virtual funds before risking real money. 7. Mobile app. Etoro offers a mobile app, allowing users to trade and manage their investments on the go. Cons. 1. Spreads. While Etoro doesn't charge commissions on stock and ETF trades, it makes money through spreads, the difference between the buy and sell price. This means traders may pay a slightly higher price when entering a trade. 2. Limited research tools. Etoro's research and analysis tools are not as advanced as those provided by some other trading platforms. This could be a drawback for experienced traders who rely heavily on in-depth research. 3. Withdrawal fees. Etoro charges withdrawal fees, which may discourage frequent transfers of funds. 4. Lack of direct ownership. When you buy stocks on Etoro, you don't have direct ownership of the underlying assets. Instead, you own CFDs, contracts for difference, which means you don't have shareholder voting rights. 5. Risk of loss. Like all forms of trading, there is a risk of losing money, and it's possible to incur significant losses on Etoro, especially if you're not well informed or make hasty decisions. 6. Limited cryptocurrency selection. While Etoro offers a variety of cryptocurrencies, it doesn't provide as extensive a selection as some dedicated cryptocurrency exchanges. In summary, Etoro is a user-friendly and innovative trading platform that appeals to a broad audience, from beginners to more experienced traders. Its social trading feature and commission-free trading make it unique, but traders should be aware of the potential downsides, such as spreads and withdrawal fees, as well as the risk associated with trading in financial markets. It's important to conduct your own research and consider your trading goals and risk tolerance before using Etoro or any other trading platform.